fintech in driving green and sustainable finance. I would like to start by extending a very warm welcome to His Excellency Governor Hassan Abdallah, Governor of Central Bank of Egypt, and of course a very warm welcome as well to all the other governors, ministers, excellencies present in the room today. Thank you very much for joining us for what I really hope to be an illuminating discussion and conversation on the role of fintech. My name is Ayaz Mita. I work with the UNDP and I am leading a global program on digital finance and fintech innovations for sustainable and green finance. And it is my extreme honor and privilege to be the host and the moderator for today's session. Before I introduce the topic to everyone, I would like to give my fellow panelists an opportunity to introduce themselves. You will see that we have a breadth of experience and expertise around the table here for the discussion today. So I would like to start with Rasha. If you don't mind introducing yourself, please.
Rasha Negm, I'm heading the FinTech Innovation. Actually, I'm Assistant Sub-Governor for FinTech Innovation at the Central Bank of Egypt.
Thank you, Rasha. Maybe let me turn to Melanie.
Thank you very much. My name is Melanie Keita. I am the CEO and co-founder of Melanin Capital. We are a climate fintech that finances the green transition of African SMEs, and we reward them for going green. Thank you so much for having me.
Thank you, and we'll go in order. Ken?
Yeah, thank you for the invitation. I'm Kenneth Ko. I'm from Mercy Corps Ventures. We are an impact-focused venture capital fund based out of the international humanitarian organization Mercy Corps. We've invested in 43 companies. 49% are female-founded, and we're emerging markets focused on climate and financial resilience.
Thanks, Ken. John?
Thank you very much, and good morning, all. My name is John Bosco Sebawi. I'm the Deputy Chief Executive Officer for the Pan-African Payment and Settlement System, which is a subsidiary of the Afrexim Bank and deals with cross-border payments in Africa. Thank you very much.
Thank you. And last but not least, Osama.
Osama Abbas, Head of Financial Services in Vodafone Egypt. Welcome, everyone. We're glad to have you all here.
Thank you very much, Osama. So let's get started. We have an exciting conversation and not enough time to cover it. But I guess I wanted to introduce briefly the topic. So why do we need to talk in this forum about fintech and green finance and sustainable finance? What's the link? Well, we all know that the role that fintech has played during the pandemic. Let's not remind ourselves of that. We've been through that painful phase, and we've seen that fintech and payment platforms have been instrumental to overcoming the crisis. But really, fintech is recognized to be more and more instrumental to green and sustainable finance. For example, we wouldn't have today $2 trillion of green bonds without real-time rapid data flows on use of proceeds. In a lot of our economies, pay-as-you-go models are unlocking access to capital-intensive utilities for poor people. We are seeing a lot of pay-as-you-go models for portable solar home systems, for solar-powered cook stoves. We also have circular economy models and sharing economy models. In East Africa, some farmers are already starting to share expensive agricultural equipment using digital platforms for sharing. So we see that fintech is actually already playing a significant role. And maybe two areas where I see a lot of innovations happening more recently is in the area of nature finance. And we see a lot of fintech-enabled nature-positive finance projects. As an example, for instance, we are currently, as UNDP, leading a project in Argentina where we are actually designing a financial instrument that is a sort of a security in the form of an eco-token on a blockchain platform to mobilize private capital for the financing of the conservation and the restoration of forests and wetlands and peatlands, but also in support of the development of the local indigenous community who are really the guardians of the forest. And we are also designing the digital monitoring, reporting, and verification system that allow for accounting of environmental and social impact. And so fintech and digital innovations are actually playing a critical role in this area. So we see a lot of developments in the nature finance space, but we also see a lot of developments in the climate finance space and financing the climate transition with all sorts of innovative business models, from carbon calculators for individuals to start understanding the carbon footprint of their transactions, all the way to innovative ways of funding green SMEs and green farmers. And maybe I'll give you a final example before turning to the panelists, which is in East Africa, again, in Uganda, a project where we actually designed a system to capture alternative data points, environmental data points using satellite imagery but also data points using soil scanners and sound scrapers to really assess how sustainable farmers were, for financial institutions to be able to provide better loans to farmers that were more sustainable in their practices. So in this particular case, we use technology and fintech to capture information about the farm plot and the practices of the farmers using satellite imagery, as I mentioned, using sound scrapers that allow you to capture the sound of biodiversity around the plot, the sound of human activity around the plot, the sound of natural elements, rain, fall, and wind, for instance, to be able to measure how the environment around the farm plot is actually evolving over time, and that's a proxy for understanding the sustainability of the practices of the farmer. And this is what allowed us in the scoring algorithms to give better rating to farmers that were more sustainable. So these are just a few examples to show you that fintech and digital actually play a significant role, because access to data, access to information about environmental outcome, social outcome, economic outcome is becoming more and more critical. And you will see through the discussion today that fintech is allowing us to do that. But let me, without any further ado, turn to Rasha as the host. If you wouldn't mind doing us the honors of kicking us off in this discussion. And really the question I would like to ask you is, can you tell us a little bit about what the Central Bank of Egypt has done and is doing currently in terms of evolving its regulatory framework to really enable those type of innovations to happen in different areas, digital lending and other areas, and how that is going to be supporting the nexus of fintech and sustainable finance?
Okay, thank you, Iyas, and a very warm good morning to everyone, and welcome to Sharm el-Sheikh. Well, before I start, because I know that in the last couple of days everyone was talking about the importance and the benefits of sustainability, sustainable finance and green finance, what I would want to put here on the table is the importance of the fintech and how it's like emerged to be a powerful disruptor reshaping the whole financial industry on a global scale, and Egypt in specific, because now I think that Egypt is home to more than 177 fintech startups and PSPs. Actually, they're diversified now in 14 subsectors. Like 5 years back, we couldn't have seen like 1 or 2 or 3 startups that are actually specialized in payments. Now we can see more subsectors entering, like alternative finance, personal finance management, tech, insurtech, and so forth, agri, fintech, and some of the sustainable finance solutions. And those actually fintech startups have actually raised in 2022 alone like $360 million when it comes to the VC investment. This is like 28 times increase in the last in 3 years' time. What I'm saying this is the beauty about it is 60% of those startups customers are actually youth from the age of 20 to 40. So this is like an untapped segment that we're seeing, and they're served by young entrepreneurs, like co-founders are actually 65% are below the age of 40. This is why we're having here Melanie and Ken with us, like successful young entrepreneurs and technologists sharing their stories here. So because basically if you want to embrace ESGs into our business models, if you want to develop the sustainability and sustainable finance within our agenda, then we have to look at the fintech to bring new innovative solutions. And this is where we come in and step in into the ecosystem in order to support those innovative developments, put exactly like regulatory framework, and not only this, but step in as market enablers and maybe market actors in those developments and see those developments on the ground. So I'll start very quickly with the regulatory landscape to give the chance for the other panelists. So we've started with the issuance of the new banking law in 2020, where we actually had a dedicated chapter for fintech and payments, so we can actually endorse the digital financial services. So we're going to find like digital banking, the open banking and open APIs, and even the regulatory sandbox for testing new solutions, innovative solutions that has regulatory hurdles, which is actually operational since 2019 in the Egyptian market. But again, accelerating things when it comes to the accelerating non-traditional rate of doing digital lending, which is the behavioral scoring. So the central bank has issued like a circular for the banks allowing digital or allowing behavioral scoring for the MSMEs, the micro and small businesses, for sales turnover not exceeding $20 million Egyptian pounds per year without using the formal documentation, which is actually hindering the access to finance to those segments. Mobile payment regulations, the third edition, introducing the digital lending and the digital saving on the mobile wallet. Maybe I can talk a bit about that. But also, we didn't stop here. In cooperation with the Financial Regulatory Authority, we're now preparing of issuing a new law, fintech alternative finance, for introducing the new trends like the crowdfunding, lending-based crowdfunding, equity-based crowdfunding, peer-to-peer lending, the ROSCA models, because we know that as we go along, there's a lot of disruption in order to finance and invest in those new innovative solutions. So this is like a brief, and maybe we can talk more about the market development later on.
Thanks a lot, Rasha. It's really exciting to see Central Bank of Egypt playing such an engaged role with the ecosystem to facilitate, to support, and to help build a vibrant ecosystem. And we'll get to the issue of alternative lending and all sorts of forms of financing, particularly for SMEs, which are at the heart of our economies. But let's now hear a bit about from market players. And I would like to turn to you, Osama, maybe to start, because when we talk about digital finance and digitalized financial services, lending, and so on and so forth, obviously digital payment rails are foundational to the infrastructure. And so you play a key role in enabling all sorts of financial services to be developed and innovated on top of the payment rails, but also you play a key role in terms of driving more sustainability. So could you tell us how, from a payment provider perspective, you're actually looking at sustainability aspects and issues, and can you give us a few examples?
Yes, sure. Thanks for the question. I think digital payments and fintechs are serving perfectly the objective of sustainability and green financing. It all comes hand in hand with our objective to reach the masses, to reach the unbanked population with financial services that they've been excluded from for quite some time. I think in Egypt we have a success story, a clear success story of supporting unbanked population with and educating them about payments, financial services, and digital services as well. I can recall back in 2020 when the pandemic hit the globe. I think with the support of the central bank, we had this opportunity to simplify onboarding masses to the mobile wallets, which helped a lot in supporting people at that time, which was a very basic service, which is the money transfer or the peer-to-peer transfer. And with the peer-to-peer transfer, it's unlocking lots of opportunities for the mass majorities between supporting them in a more convenient way to transfer money, which will have a direct impact on lower transportation, lower commuting, which will definitely reflect on less carbon emission. As we all know that the average person to travel a kilometer, it consumes like 0.85 grams of carbon with this commuting. So I think this helped a lot, and now millions are still using this service. It unlocked also the opportunity for small businesses and entrepreneurs to utilize the acceptance railways that we offer to consumers. The exposure of their business has been growing significantly in that space. And this also helped a lot to creating a more, capturing more data, delivering more behavioral scoring, and that will help in providing financial services from lending, saving, and other financial services that they really strive to have to grow their business, to improve their lives. And the beauty of this is while improving humanity's life with digital payments, with digital services, you come clean. You come clean with sustainable practices to the community. I can recall also a huge success story in Mozambique, where Vodacom has been supporting the rural areas of Mozambique by providing them access to electricity, okay, with solar energy devices that they can buy using their mobile wallets in M-Pesa, and they can also recharge and pay for it with M-Pesa as well. And this has had a huge impact on uplifting their lives, the quality of life they're having, the amount of opportunities they can unlock. So I think it's also going hand in hand in creating opportunities, sustainable opportunities for the excluded majority from financial services, and going clean as well to serve the planet for the future.
Thank you very much, Osama. This is very inspiring. So you've reminded us of a few important things. It's all about the lives of the people. It's all about the lives of small entrepreneurs and micro businesses. It's about sustainability. And in fact, in this journey, sometimes very simple steps actually matter. So I remember doing some work with Paytm in India, one of the largest payment providers. And one of the things we assessed was in the shift at the merchant location from paper receipts to SMS receipts at merchant points at the POS terminal, the amount of paper that was saved on the scale of India and the amount of trees that corresponded to the number of papers was staggering. So sometimes those simple steps are also very, very important. And thank you for reminding us of the importance of all of that. And of course, SMEs. And you were talking about access to lending, etc. SME is one of the highest priority of our time, of course, alongside environmental concerns like climate change, biodiversity loss. And ideally, if one could actually combine SME financing with green transition, with mitigation of climate change, with avoidance of biodiversity loss, that would be ideal because we would be delivering tremendous societal, social, economic, environmental value. And there are some businesses in Africa that do that. And I would like to turn to Melanie to maybe inspire us about how are you using fintech today in your SME, green SME finance marketplace to actually really drive the green transition while providing access to financing.
Absolutely. Thank you so much, Ayaz, for that opportunity. So basically, when we started Melanin Capital, we started it as a climate fintech from the get-go because we both studied climate sustainability, my co-founder and I, and we saw that climate finance is actually the largest funding opportunity for African businesses in this generation. We thought that with all the corporates that are spending millions, billions in carbon credits to reduce their carbon emissions, we had almost $1 trillion opportunity that could be spent in renewable energy, sustainable agriculture, forestry, or recycling into our continent. The problem that we saw is that to be able to access this climate finance, these carbon credits, you would need to actually build that data, access this data of those SMEs going green or reducing CO2. And this is where fintech technologies can play a great role. So we built Melanin Capital as a green lending platform where SMEs could sign up, connect their mobile money wallets, get insights about not only their financing, but also their footprint. Now, how are they going to be incentivized to actually go green? Because CO2 is not their main worry on a daily basis. Yeah. They also want to grow their business, create revenues and livelihood for themselves. So we thought that we could build a mechanism to incentivize them to go green. So when they sign up into our platform and get those insights, they get recommendations on how they can go green and the financing to be able to buy solar equipment like solar irrigation for farmers, solar fridges for retailers, solar point of sales, and even electric motorbikes for deliveries. And the more they're going green, the more we track the CO2 that they're saving, and we can be able to sell the carbon credits that comes from these savings and give them cashbacks. So to just give you an example, in Kenya we have our famous boda drivers. Those are motorcycles drivers. They can deliver food, they can deliver meals, they can transport people to their homes. And when we finance for them an electric bike, so it's around $1,500, with our mechanism we can give them back up to $700 at the end of the year. That's almost half of the price of the bike. So of course for that boda driver, then they can think how they can green most of their operations. For even a vegetable retailer, she can think about how she can scale by going green. And this was the objectives that we have by building Melanin Capital. And we don't even stop there. We use this data and help the banks to use climate data and this greening data into their credit scoring and favor green companies. Because at the end of the day, we need $1.2 trillion to go towards the green transition. So it's not just by having one or two fintechs here that will manage to achieve that objective. We need to work together with the central banks, like Racha was mentioning, with the traditional financial institutions, and with us technology providers to be able to channel this financing towards the businesses that truly needs it, and to achieve our objective of reducing by 50 million tons the CO2 in Africa. So yeah, we are now very excited about this milestone, and we look forward to financing the green revolution in our countries.
This is super exciting, and I was not counting during your presentation, but one of the words that you used the most was the word green. And that will allow me to tease a bit more out of you and understand what you mean by green, because one of the things that we actually launched in Zimbabwe is BIT SME financing marketplace that's based on an online portal integrated with market infrastructure to onboard SMEs and capture all sorts of alternative data points. And we use that to vet, score, and rate SMEs to expose them to debt funders. But we're also integrated with the stock exchange in Zimbabwe, so that SMEs that are the largest ones can immediately be listed on the stock exchange for equity funding. And one of the challenges we had was, how do we scale that business model to start with? And how do we assess and rate the greenness of businesses? Because obviously we don't just want to be funding SMEs and unlock access to financing, but also really drive greener and greener SMEs. And so we developed internally at UNDP something called the SDG Impact Standards, that we are using for screening the greenness of businesses and trying to apply that at the level of SMEs and MSMEs. But the lower you get, the more complicated it becomes. So I'd be really keen, but I'll come back to you with a follow-up question on that, to understand how are you assessing the greenness of those businesses, and what methodologies are you actually implementing? Because there's the screening, and then there's the carbon credit equivalent that will require some sort of formal methodologies, right? But I wanted to turn to John, who's been listening very attentively. And I know that in your case, SME finance, trade finance, working capital, financing, etc., is probably your daily bread and butter. I would dare to say your daily fatire, maybe. And so in your case, how are you actually looking at your business today? And how are you using fintech innovations to actually support that business and engage your target audience, which are the businesses that you actually fund?
Thank you very much, and good morning, all. I will start by laying the foundation of what's a fintech anyway. So let's give the first principles. How has it evolved along the way? I think these are very simple computer programs or technology that can help to offer banking and financial services, which started as a very simple accounting system probably, and now have become very complicated systems that offer lending services, use maybe blockchain technology and stuff like that. And more importantly, I'll go to the area of payments, because the most important economic activity that one performs, all of us perform, is a payment. Either buy or you're selling, but either way, there's a payment involved. So then I'll get to what the bank is doing in this space and how to improve it. Because in any activity, the most important thing is information. So if you're funding SMEs, if you're going to source equity from the capital markets level, you need information. You need to know what that SME is, who they are. So the Afrexim Bank has created a digital ecosystem that involves a trade information portal where you can get information on trade, a regulatory information portal where you can go in and get all the regulations are around trade in a particular country. So these are geared towards increasing intra-African trade and financial flows. And more importantly, we have other two platforms where you have the Mansa, where you can do a due diligence on a company, an SME. So an SME will put all the information if they subscribe to Mansa, and then one can do a desk due diligence without any seamlessly. Now, let me come to the area of payments, because payments becomes very important. One of the digital ecosystem is the Pan-African Payment and Settlement System, which I actually am the deputy CEO. This is an ecosystem that of institutions, central banks, commercial banks, and fintechs as well. So what are we trying to create with the Pan-African Payment System is to offer an efficient payment system across Africa. And backed by the availability of information on trade, on regulations, on due diligence, now we come to how financial flows are going to go. So PAPS, as the acronym goes, involves central banks coming on board and doing their regulatory role, commercial banks providing the funds, and now fintechs coming to as the last mile to offer the SMEs the platform to be able to pay to each other and offer them scale and access to finance. Many SMEs are not receiving finance because of the financial institutions don't have the information about them. But by involving themselves in the payment ecosystem, this information is available and they're able to obtain that. So this is how the PAPS and the Afrexim Bank are promoting and creating an ecosystem that enables SMEs to access finance and also to be able to have climate financing and all that, because climate financing and sustainable finance is all about having financing projects that have an environmental objective so that we don't continue to destroy the environment. I mean, we all know that a couple of years ago, we used to have scratch cards for phones. I mean, all these were degradation to the environment, but now they don't exist because payments were improved. So this is what the bank and PAPS are doing to be able to arrive at that objective.
Thanks. So you actually mentioned a few very important things. One is about access to information that you kept talking about, which is really critical in every financing decision that you make and in understanding the climate impact or environmental impact of businesses that you finance. And I guess that's one of the topics that I would like to discuss maybe with Ken in a second. But you also mentioned reporting back on the investments that you make, if I heard you correctly, because the sound is not necessarily coming back nicely to me. But that's also something really important, and it requires a lot of reporting frameworks and standards. And at some point, I'd like to turn to you, Rasha, to also understand on the reporting side what really drives sustainability in terms of reporting frameworks and standards, etc. But let me turn to our tech guru today on the panel, which is Ken from Mercy Corps. I guess we've heard about all sorts of ways in which fintech and technology is being used for addressing the challenge of SME finance. But actually the implication and the application of fintech and technology is much broader across all areas of sustainability, from the blockchain to connected devices to satellite imagery to remote sensing to artificial intelligence. There are so many different ways in which we can implement technology to actually drive more sustainable and greener finance and redirect financial flows towards sustainability outcomes. Can you tell us a bit from your experience about examples that you see that are interesting, exciting, promising? I know you've worked on a lot of different things across Africa in particular. Just share with us a few thoughts, please.
Yeah, so I think like starting with a lot of the AI, artificial intelligence, advanced data analytics conversations that have been going around with the different data points. We have one portfolio company working in Tanzania that provides instant overdraft to mobile money agents. So at the end of the day, if they don't have enough balance in their float, the bank is closed, they can immediately draw down on a line of credit available to them, which is availed because of the number of data points that are immediately scorable, and then you can provide a fairly priced loan, ethically issued, and it gives the mobile money agent a chance to earn more livelihoods, greater profits. I mean, that's just one of the many AI/ML applications that you're seeing in credit scoring. I think two of the other ones that I want to touch on, and this is actually more related to smallholder farmers, who I think maybe they're the S in the SME in some definition. One, I think, is around the application of blockchain for traceable supply chains. And so I think if you think through the fact that there's 600 million smallholder farmers, largely speaking, they're not compensated equitably. You have in North America, Europe, big pushes for things such as fair trade, eco-trade, but in reality, a lot of that money doesn't actually flow down and it just gets gobbled up by large corporations in the middle. Using blockchain technology, where you actually have transparent, immutable data that's put on chain, you're able to actually see how much money makes it from each transaction. So if you're talking about a farmer, the farmer has their harvest, they can sell it at farm gate to the cooperative or whoever is the aggregator in the middle there, and then they're logging the number of kilograms sold, the price that's being sold, the date, the crop, things like that. And then every step along that value chain, you're able to put this data on chain. So then me or whomever as a consumer, you're in the store, you can scan a QR code, you can see exactly the flow of funding and how it goes down there. So rather than these opaque claims of fair trade, now you have immutable data that can actually prove, how much of your coffee crop is actually going down to the farmer, and then consumers are able to make better choices, which will then put more pressure on brands and corporates to actually disrupt the value chain. So I think that's one application that you're seeing of blockchain technology that's actually driving some change. The second one that I wanted to touch on was parametric crop insurance. So farmers in sub-Saharan Africa, on average, only about 3% of them buy crop insurance. This is compared to, say, like North America, where it's like 90% plus. Like almost everyone is buying crop insurance because it's viewed as an essential product to protect yourself from downside risk, especially with larger climate variability, climate disasters on the mend, drought, flood. But as you're seeing here, there's much lower uptake, and that's happening for a few reasons. One is that the payout ratio is really low, so when you're buying an insurance policy, you're just not getting very much value for it. The claims process can be quite slow. So we were working with a partner where they were starting with a 45 days claim process on average, meaning, your land was hit by a drought, your crop did not harvest, and therefore you didn't make any money this season, but you didn't actually get paid on your insurance policy for a month and a half, 2 months on average, which is of course not really feasible if you're trying to keep food on the table. And then the last piece was around transparency. So you don't know how much you're getting paid, you don't know when you're getting paid, you just have a bunch of questions and nobody's giving you any answers. So one solution that we've been running is around leveraging a combination of satellite data, data oracles, mobile money, and smart contracts, and it's allowing you to automate this entire process. And you're bringing in very rich, publicly available data, bringing it on chain, and then integrating it with different payment mechanisms so that the instant a extreme weather event occurs, you can trigger that payment immediately to the affected farmer. And so in the work that we were doing, we were working with 20,000 farmers in Kenya. We increased the coverage amount by 27%. This is because of the automation, right? You take out a few actuaries, you take out a few ops people in the middle, people who are processing manual claims, and now all of a sudden you can automate it and therefore reduce your costs. The payout time reduced by 97%, so it went from 45 days to effectively instant. And then as a result, you also had much higher trust among the populations who were affected. So now you have farmers who actually like insurance, which historically had been such a pain point for them. And we were finding that because of the transparency that was being brought on chain with this data, anyone could dial a USSD command and say, what's the status of my policy? And in particular, women farmers were appreciating this because now it was a much more non-confrontational way to receive data on the status of your payout, right? Rather than going back to your input supplier or whomever and asking like, oh, when am I going to get paid? Now you just dial a command on your feature phone, and you'll know instantly whether you qualify for a payment, when to expect it, and things like that. So all of this led to a much higher quality of life for the participants. And so these are just a few examples where I think you're seeing a lot of innovative tech coming in and being able to improve processes and pain points for people. And I think one thing I do want to caveat is that I don't think technology is going to save everything, right? I think we all probably hold this opinion, and I think it's always important when fintech is the topic. And so I think technology is going to play an important role, but it's just one of the many tools that we're going to need to use effectively and really intelligently to make sure that we're actually progressing and improving people's livelihoods.
So I will do like I did with John. I won't do justice to the richness of your presentation. I'll just speak one topic, like I did with John, on what you said. I think it was interesting that you reminded us of the many different applications of the blockchain. That could be really interesting. And generally, when we think of blockchain, everybody starts worrying about Bitcoin and crypto and all these things that could be nasty and potentially cause a lot of problems, consumer protection problems and other problems. But there's actually very good practical implementations of the blockchain. As a matter of fact, one of the projects I am currently working on with the Monetary Authority of Singapore is the design of a digital identity for SMEs that capture all sorts of different data points from the market, from alternative sources like utility bill payment, mobile payment transactions, all sorts of things that help you understand the profile, operational, financial, and green profile, and I will turn to green in a second, of an SME to be able to unlock financing for that SME. And those SMEs are going to be able to own that digital identity as a passport and apply it across borders in different markets to unlock financing from financial institutions. So there are indeed many interesting implementations of the blockchain. But before we turn to the notion of greenness, and then ask Rasha at some point to bring it all back together, I'd like to hear from you, Osama, on one thing that I still wanted to ask that I didn't get to ask before is, as a payment provider in the market, you are also a market enabler in many different ways. We've been talking about the role of fintechs. I'm sure, and Rasha has been saying how many fintechs there are in Egypt. I'm sure all of them want to operate on your platform. So how do you see your role as a market enabler? And how do you see those partnerships forming as you start looking at the sustainability outcome, the financial inclusion outcome, the economic and environmental outcome? How do you actually shape those relationships?
I think fintech startups are the heart of the fintech industry in general. So in Vodafone, with the capabilities, with the payment platform that we have, we're having a framework where we're inviting all the fintech startups in order to offer their services to our mass consumers, the millions of customers that we support. And I think with all the dynamics, the innovation, the creativities, the solutions that happens across all the startups, from supporting different financial services and being super creative in delivering a simple experience, a targeted experience, we will be setting up to fail if we're not really opening up our platform to the fintech startups, because this in a way it helps the adoption of mobile wallets and digital payments in a bigger scheme of things, and it's also accelerate the scaling up of the fintech startups. So we have so many examples in Vodafone Egypt who have been relying on a fintech startup to manage our user interface gateway, to support us with the entire development of the user experience and multiple simple financial services that we offer to our consumers. And now it's like we scaled them up significantly, and this helps a lot the growth of the mobile wallets adoption in Egypt. We have so many cases. We're now having over 1,000 fintech are part of our platform, and this is not only in Egypt. It's the common practice across all the African market that we operate in. So in M-Pesa, there is so many other practices on online acceptance, supporting the startups and the PSPs in that space. And this is also help growing and scaling up the adoption in a very fast pace. So it comes also hand in hand. Ken and Melanie of the Word are the engine, or the engine for growth of all the fintech business in the globe.
It's really exciting to hear how you're actually framing that relationship and the vision that you have in mind for the market outcomes that you're seeking from those fintech relationships. And I'll come back to you. We've talked about the supply side of financial services and innovation with the fintechs. I'd like to come back to you after that to really explore now the demand side of financial services and the people who are using and the businesses who are using your services and how you're actually engaging that particular group. I'll come to you, John, in a second, but I'll turn first to Melanie. You've been talking about green a lot. And I would love you to tell us what do you mean by green, because as much as we've made a lot of progress on measuring and standardizing and building taxonomies around environmental outcomes with the NGFS, with the Task Force on Climate-Related Financial Disclosures, now the TNFD that's coming up with its recommendations, the Task Force on Nature-Related Financial Disclosures, the translation of these frameworks and taxonomies at local level in different countries, it's still taking a lot of time. And if we want to drive sustainable finance and green finance, well, we need to start by defining what does green mean and how do we actually measure that and how do we assess that. And you're doing green SME finance, so can you enlighten us on how you're actually assessing the greenness of those businesses?
Absolutely. So the way we identify green, it's not just from us, actually. We have to work with different stakeholders to be able to comply, let's say, with the definition that works for our countries. And I would like to talk more about the country where we operate, Kenya, because I think the country has been doing a lot to help fintechs like us to start designing products that actually are fitting a definition that is important for the country and for the financial industry as a whole. So there's two approach that I believe Kenya has implement for that. First, at the central bank level, at the moment there are discussions, dialogues that the Central Bank of Kenya has undertook with the financial institutions, the banks and microfinance, to discuss how climate risk can be assessed, how greenness can be assessed and put into account into the financing process and the credit process. And this actually led to banks like Absa in Kenya to come to us and ask how they can use our platform to be able to make those measurements and collect this data. And this led us to come to a green definition where we looked at the CO2 emissions as a proxy. So you become greener, the more you save CO2, the more you reduce CO2. And now we are working again continuously with ABSA, with the central bank, to see exactly how we can align also the methodology of quantifying CO2, of tracking CO2, in a way that it is fully standardized and that we can replicate also in other countries. The second aspect and how greenness is kind of defined in Kenya is through the policies that the government have been implementing. So for example, per industry, the government are actually putting up standards and fines if you don't have certain green standards. The first one was on the property market, construction market. Now it is compulsory to put into your buildings solar panels and solar water heating system. What does it mean? It means that when you want to go green in the construction industry, those are the two standards that you have to implement. And this also fosters a lot our activities, because then they turn to us to be able to finance those kinds of items, and it helps us to scale faster. So just to give you like two aspects of how we can be able to standardize and quantify greenness, and of course there's much more dimensions and things that we need to look at, from biodiversity and so on. But it's important that those definitions are put together with also government institutions and financial institutions, because there's no way we can achieve a standard definition if the main stakeholders are not agreeing on those aspects. So our role as a fintech is just to not come up just with our own subjective measurements, but to work with the market. And I think that it's been really a better field to work in Kenya for that, because the government has been really pushing this agenda, and I am very hopeful that we'll get towards a standardized approach in the coming years.
And I'm sure you've been involved in constant conversation with the regulators to actually really inform back the regulatory process as those standards get designed, right?
Absolutely, because for the regulator perspective, it's also important for them to see what they can implement as regulation about going green, and what is actually quantifiable, what is reportable. So that's where we could then work on pilots with Absa Bank, for instance, with 600 SMEs, in collaboration also with the African Development Bank, to test what is the data that we can collect, what can we implement in the credit scoring algorithms of our platform that the bank will use, and how can we be able to continuously monitor so that it actually makes sense for the central bank after to put in place the right regulations.
That's a very nice segue at some point into a discussion with Rasha on this, but I'll turn to John. I'm coming to you, Rasha. I'll turn to John for a second. So John, you're actually, there's a lot of things that Melanie has been saying about getting access to data, getting access to information, having the right reporting standards and frameworks. In your case, you're running a Pan-African business, which means many different markets, many different approaches, many different priorities across social, environmental, economic priorities in many different ways. How are you approaching this entire issue of sustainability reporting of your business, the entire issue of ESG footprinting of the business and the financial transactions, or SDG reporting? How is this sort of shaping up today in your context?
Thank you very much for that, and I like what Melanie has just brought out about regulations and providing this information and how these can work together. Yes, I'll take a step back and also refer to what you said you're doing with Singapore about this unique identity. So what one of the digital ecosystems platform we have at Afreximbank is the Mansa platform, which I spoke about earlier, that offers due diligence. So once an SME, whether it's a fintech, any kind of SME, subscribes to it, it's issued with a unique identification number. So now that is its identity throughout Africa. So what the platform, the digital ecosystem of Afreximbank does, it opens up. It's not whereby the information is available from any jurisdiction, any economy, about trade and about that particular SME. So it's upon the users who can use that information and what they want to use it for. But what we make sure is that the SME is identifiable and the due diligence is done so that with that information, whether it's a lender or an investor can inject in the funds with confidence and make informed decisions about it. So that's how, because Afreximbank and the Pan-African payment system are cross-border all over. So we provide information to all.
So maybe if I can ask you, because you're talking about SMEs onboarded on the platform, right, and bringing that information, is it mostly self-reported data? Is it data that you actually also use digital tools and mechanisms to go and connect independently through alternative sources of information in the market? How does it work?
Yes, it's self-reporting, but however also complemented by investigations, by finding out where this information is actually valid and validating it. So once that's validated, then that's why it's a due diligence. So it's provided and also validated. So that confirms that the information given is true and can be used by an investor or a financier. And this opens up opportunities for SMEs across Africa.
So there is a verification process.
There's a verification process.
It has to come from a trusted source.
Yes.
Super. So maybe I'll turn to Russia before coming to you, Kenneth, if that's fine. I would like to, because we've been talking a lot about reporting and regulatory reporting and sustainability. And so one question I have to you is really, are you aware of the development of any standards here in Egypt right now, and what's your participation in it potentially, or is it extending beyond the central bank, and who are the involved participants? But how does it actually really support sustainability reporting in this context?
Yeah, sure. Because in my last answer to your question, I've been talking about how the fintech work in terms of regulatory development and the digital financial services. But here, because of all the interrelated regulatory framework that we're putting together for the sake of this agenda, Central Bank of Egypt has issued the binding. First, they've issued a guiding principle on sustainable finance for all the banks, and then they issued a binding regulation based on this guiding principle, where actually banks have to incorporate sustainable finance policies within their credit and investment policies. And not only this, but the bank's board of directors should actually make sure that it's in place. They have a dedicated standalone department that actually, with sustainable finance, that actually reports to either the bank CEO or the deputy. But not only this, but reporting on the activities or the sustainable finance activities within the credit portfolio, actually reporting to the central bank their sustainable finance in general based on GRIs and so forth. So this gives an enabler to platforms such as Melanie to actually have a common way to speak to each other in developing new innovative solutions, because they need to have those kind of sustainable finance into their credit advancements. But not only this, I have to refer back to other area, which is when the central bank mandated 25% of the bank's credit portfolio should go to the MSMEs. We're actually 10% into the equity by investing into startups through fund of funds. But this is actually putting all this together. We can actually end in the fintech department having a matchmaking program, because I'm not sure, Melanie, that you've when talking to APSA, was it an easy process or not? But most of the challenges is startups talking to banks because they speak totally different languages. But through this matchmaking programs, we actually see the problem statements at the bank level and try to match it with other solutions on the fintech and fintech-enabled startup side, so we can actually make it work in the market and developing store solution. And since you're always talking about data, and I talked about the behavioral scoring, and it's as we actually, because we're as bankers, we're always familiar with the credit information sharing, which is actually our credit bureau. But now, as we actually digitizing more the way we're doing financing, so we actually need new sources of data, new sources of behavioral data, whether from MNOs or utility companies, as you've said, or whatever. And this is why we're actually piloting now for having our credit bureau in Egypt, the new behavioral scoring hub. And this is by getting all the alternative finance data sources from either MNOs, utility providers, and other to have an alternative finance scoring beside the normal credit scoring. So we serve more the unbanked, the underserved, and the MSMEs and the likes.
And can you tell us a bit about how this entire approach actually translates operationally into the financial, the fintech and technology innovation department in a way, and how you think this is going to really shape a green fintech ecosystem potentially in the country? Do you have a few reflections on that, or a few recommendations or good experiences to share?
Like enabling the market on more green?
Yeah,
sure, of course. Last August 2022, because agriculture, as Ken mentioned, agriculture is one of the foremost developmental areas of focus in Egypt. I believe that more than 50% of our rural household income is based on agricultural activities. So it's important, and agri-tech and fintech-enabled agri-tech is very important, and this is why I wanted to induce the market more. We've called out for the first agri-fintech sprint in Egypt, and it was actually in collaboration with 5 of the banks working in Egypt that have agriculture as part of their top agenda. One of the banks here, what was this in the sprint, we've done an industry consultation, having the right problem statement we're actually trying to solve when it comes to the agri-fintech industry. Because again, like you've mentioned, we really need to understand what we're actually solving, like not finding a solution, then try to find a problem for it. But anyway, so we've put the sprint, we've called out for even Egyptian and non-Egyptian startups. We had beautiful models coming from either Morocco or Africa, basically on the agri and fintech. So basically, we can see models like AIs and remote sensing for helping the farmers to actually better manage their water consumption, their waste, minimizing the wastage of energy, better productivity, and actually give informed decisions to the banks instantly, so they can actually give more access to finance those smaller farmers. So those kind of market enablement, and we actually take them into the matchmaking program to make sure that those solutions are actually developed with the financial institution and the bank, along with the startups. Some other very important areas: supply chain finance, digitizing the supply chain finance. We've actually matchmake a couple of fintech startups in the Egyptian market with banks, but maybe we're studying, and this is one of the international organizations doing it with, of having a national supply chain finance platform where can all the banks actually chip in, and like a sort of marketplace, and help accelerate things when it comes to the digitalization of supply chain finance.
So I guess it really works well when the central bank gets involved in that matchmaking process. And I think at some point I also want to hear your perspective on it in terms of how fintechs and banks collaborate. But you also talked about, creating potentially a marketplace where all the banks could participate for international supply chain financing. I think that will be interesting to hear from John as well. What's the experience in using digital to engage your entire marketplace, including through digitalized supply chains, etc. But maybe one topic I'd like to explore is the engagement of citizens and individuals now in driving sustainable finance. But before we do that, we talked a lot about data, and we talked a lot about the need for taxonomies, the need for standards, reporting frameworks, access to data. Of course, data regulators are going to be playing a key role in driving sustainable finance, not just financial regulators. And technology is actually helping. So we have a lot of digital monitoring, reporting, and verification systems now being implemented using all sorts of data sources from satellite imagery to remote sensing to connected devices across supply chains to bring back information about supply chain of goods and products and services, etc. Ken, you've been also involved in that space in terms of implementing and overseeing a number of digital MRV systems. What's the current experience, and what kind of role do you think those alternative data sources and these new technologies are going to play in really driving sustainable finance at scale?
So I think if you think about like green finance as a space, right? Like one way you can attract and grow the space is obviously using regulation. I think as Melanie and Roshan were explaining, there's certain ways we can incentivize and reward the right behaviors to start pushing for more financing towards us, whether it's like solar water heaters, for example, and enforcing that as a way to crowd in more capital. I think the other way is, and especially given these are more expensive, right? These are what I think Bill Gates calls the green premium, where it's more expensive to be green. Then you have things like the voluntary carbon market, which comes in and incentivizes, will pay people to actually participate in green practices. And so over the last few years, you've seen the voluntary carbon market grow from $500 million in 2020 to $2 billion, so 4x growth in 1 year to 2021. And now it's supposed to be up to $40 billion by 2030. And so the voluntary carbon market is a mechanism where you're helping to compensate for that green premium. Now, historically, much of Africa has been excluded from the benefits of the voluntary carbon market, despite having some of the world's most natural ecosystems, reserves, basins, and things like that. And the reason why that's happening is because traditional MRV systems, these measurement, reporting, verification systems, these methodologies and the systems, they require extremely high capex, very high fixed setup costs. It's not conducive to less digitized or more rural environments, and it's just not affordable for smallholder farmers, landowners, people who are mostly affected by this. Just as an example, if you are a forest project developer, in order to make that unit economical for you to generate carbon credits, you need to have at least 10,000 hectares. And so therefore, you're already screening out anyone who's a small, like relatively small landowner. It takes over 6 months to get credits issued. And then there's extremely intensive tech requirements. So you need to bring in consultants, auditors to just get access to these markets. And so as we've seen is that these systems are not really right fit for the landscape here. And so I think with some of the new technology that's coming on, I guess you can put them on a spectrum in terms of like what's ready now versus what is going to take a few years, or maybe it's a bit more science fiction, hopefully not, but maybe a little bit further down the line, right? So I think like on like the more futuristic stuff, it's the application of drones and AI. And you're starting to see that, right? Like you have drones that are these unmanned aerial vehicles, they're flying through farmland, and they're able to monitor regenerative farming practices. And so you can actually see, are farmers going no-till? What's the application of mechanization, organic fertilizers, things like that. You can use this using drones, and therefore it's of course like much more affordable as a way to track this data and to report on it. AI, you have software where a farmer can take a picture of whatever they're using, right? If it's this organic compost as their fertilizer, and then upload it to a platform, AI can screen it, make sure that it looks properly, make sure that the garden is growing as expected, and all of a sudden now you've got proof, or you've got verification that there are green practices being instilled, and then hopefully that'll lead to some of the incentives down the line. Maybe a bit more real, or not real, that's the wrong word. A bit more present, you have something like Open Forest Protocol, which is a blockchain-based system where instead of going through a centralized registry process like Verra or Gold Standard, they have a system of qualified network validators, and these validators are incentivized to participate, and they use ground truthing, they use satellite imagery, they use a combination of all these different data points to verify that the tree growth and the land usage is as the forest project developer is stating, and that way it's a way to unlock access to carbon finance for these individuals. You have, I guess the other ones that you can think of, like we were working with this partner who's using sensors and IoT in their concession, and this is a way to track biodiversity health. So for example, this is an area that has lots of tigers. And so just having sensors, you're able to track and say, okay, well, like, looks like the tigers are healthy, they're moving around, so you can get biodiversity credits as a result of doing this. And these are, of course, just like much more affordable ways and much less capital-intensive ways to do this. The last one that we have is a company that we're working with called Meridia. They're working in Cote d'Ivoire, Ghana, Malawi. They do land mapping and titling. And so this is a way to issue proof of ownership to landowners. And that, of course, is a first step in order to say, okay, well, if you're going to get carbon financing, you need to, of course, show that you actually own or have rights to this land. And so this is like a fundamental infrastructural piece that needs to be in place that helps unlock some of these benefits. So I think there's just a range of these solutions and at different levels of maturity. But I think these are some of the technological innovations that are coming along that will help to make green finance more accessible to people who've otherwise been outside of the market.
This was actually quite inspiring, and I think we could talk about that for hours.
He can leave this block note before going home.
Yeah, in fact, one of the things is, so there's a lot of things that are possible today. And it's interesting because the way we can use remote sensing technologies, particularly for nature conservation or natural ecosystem conservation, is extremely exciting, but also challenging in many different ways. So across some of the projects that I am currently involved in, there's diverse natural ecosystems in which you are going to be using those remote sensing technologies. And so if you're in a very dense forest versus if you're in an open savanna, you're going to use very different types of approaches and technologies for doing that. And AI has a huge potential. One of the things we are doing in West Africa right now is designing something where we're testing AI to recognize each individual elephant in an elephant herd in a project about financing the conservation and restoration of the elephant herd. So there's a lot of potential here. Maybe a last round, because we have 15 minutes left in this panel, and I'd like to keep a few minutes in case there's any questions from the audience. But I would like to really explore the potential of engaging citizens or individuals and businesses in the green transition. When we talk about sustainable finance and green finance, we often talk or think of sustainable public finance, sustainable private finance. We think about governments, about institutions, about financial sector, about corporates. But what about the people? There's $60 trillion of annual consumption from people by people. Retail investors are moving 30 to 50% of daily market trading volumes across most markets. They can move the needle in a significant way. If just 10% of the $60 trillion of annual consumption could be redirected towards green and sustainable consumption, the problem of financing the SDGs would be sorted on a global scale. So engaging people in greener choices is something that's significant. And we see already all sorts of carbon calculators that give you the carbon footprint of your financial transactions. We see all sorts of projects around the tokenization of the assets that get invested in through green bonds to fractionalize the assets to be able to reduce the coupon sizes of the green bonds so that the retail segment can participate. There's a huge potential there. And I'd like to start with you, Osama, to really see, you've talked about the fintech side.
Yeah.
Now, if you look at the consumer aspect, how are you using digital technologies and innovations to engage your user base towards more sustainability-related or green behaviors in a way?
I think it's a process. So as an MNO serving millions of customers, there is a process of creating awareness, educating, and the tools for reaching this is to have consistent, relevant use cases that resonate with consumers, okay? To get them familiar with sustainability, and the important part of the sustainability is the financial inclusion and the services and how to improve their lives, so they will have this capacity to focus and engage more in so many sustainable activities as well. So in order to reach this, we have to have a consistent value that we're offering, consistent communication, simple experience across, that engage and educate customers as we go. And it's a long journey. And you have to be disciplined about the journey, because this is where you reach the masses, you create the viral effect on consumers, and this which will have a direct impact on the communities. I think what we've been doing on this as well, the big part of this is, while educating consumers, we learn a lot from them as well. So we learn a lot from them on how they want to see the service happening. And we take this dialogue to the regulator, We take this dialogue and we share it with the fintechs and startups, and with a collaborative framework that we managed to establish between the three parts of the triangle, we managed to accelerate a lot of this. So it's an ongoing journey. It's a feed in, feed out from the consumers, and this is where we learn from, and then engaging the regulator, engaging fintechs, and expanding this. And we have so many practices on allowing this. So once the consumer get used to the mobile wallets, the concept of a virtual money, okay, they get engaged more into what other financial services can I benefit from. So it starts with saving. So if I'm using your wallet, so how can I save and grow my money? How can I use more financing options, even it's a direct financing or a buy now, pay later services that we're offering. And it open up more ideas, and it expand the capabilities of the consumers, which should be in a way directed in more sustainable, more green approaches. So I think we have this famous approach in Kenya and so many other African countries, which is the DigiFarm. So the DigiFarm has been learning a lot from the individual farmers' needs and activities, and supported them with a simple marketplace that helped them to sell their products, some information about cultivation and how they can improve their farming activities, and supported them as well with financing. And this has helped a lot, moving a huge part of the population from poverty to a decent life, providing them with the right tools and the right exposure to grow their life, and also in a green and sustainable way that serves the community.
So, and do you see, obviously there's a gradation in terms of the steps, and you've talked a bit about education using your entire network of fintech, financial literacy, digital literacy. Do you see this at some point evolving towards carbon literacy, for people to understand the carbon nature and content of the transactions they make?
Of course, and it's with the small tweaks, as you said earlier, moving from the paper receipts to digital ones, and highlighting the importance of this, and how this impacting the environment and the climate, moving to a degradable use, eliminating the plastic cards used for payments and replacing it with digital payments. This is also will help in the positioning which we have to do to educate more customers about the importance of the reducing the carbon emission, and how we can all contribute to this. So this comes in hard, but it has to go through a process. So you have to develop the consumer, you have to educate them, you have to eliminate all the limitations and obstacles, and while doing this, you have to integrate the green mindset in their minds.
Now that's fantastic to hear. I'd love actually John to tell us about how it works in your context. You're focusing on SMEs, which are obviously 90% of businesses in most economies, 60% to 80% of GDP, largest employers, etc. They're critical. How are you actually building that awareness? Are you using digital tools, innovations, ways of engaging with them to build that awareness towards more greenness and more sustainable practices?
Yeah, thank you. The way the Pan-African Payments and Settlement System works is that we have an ecosystem and a tiered approach. So we have what we call direct participants, and we have the indirect participants. So the direct participants come into central banks, commercial banks, and then the indirect participants are the fintechs, and then the end users, who are the individuals you talk about, who are the SMEs. So how do we run the communication? We are basically a B2B business, so we work with the banks, and then they work with the clients. So we work with particular institutions to send the message through, and how to educate on digital payments and the advantage that we can derive, or the benefits we derive in terms of greening, in terms of environmental protection, when you use the PAPs, how you impact the environment, and how that can give you more access to finances. So we work with our participants to spread the message, to spread the information, because they deal with the day-to-day client directly.
Yeah, and I know you were also previously heading, I think, the Rwanda Pension Fund. You know that there's a regulation in Europe right now that pension funds have to engage their users, the pension holders, on the sustainability of their investments. So I hope that this is also a trend that's going to be implemented elsewhere. I'll turn to Ken quickly, and I know we have 6 minutes left. If you can give us just a couple of quick examples of how you see technology through lower transaction costs, more efficiency, fractionalization of assets, and all sorts of other things, really support the engagement of the retail and the consumers and the citizens at the most grassroots level. Any good examples that you see?
Yeah, I think, so there's two areas that I would touch on. One is asset tokenization, and I think this is alluding to your point here. So one of the projects that we're supporting in Cameroon, they're purchasing government bonds, so bonds issued by the central bank of the Central African States, fractionalizing them and then tokenizing them so that it becomes affordable for retail users to purchase these bonds. And so the minimum denomination for a bond right now is a million francs, which is about $1,500 US. But of course, that's not accessible for your typical retail investor. And so by fractionalizing them, they go down to $1.50, so 1/1000th. And therefore, of course, anyone who has any idle savings can now get access to a high-yielding, low-risk investment product. So that's one way that we've seen that is helping to generate more revenue or more investment capital for governments, while also helping to de-risk for the average retail investor. I think you're also seeing some tokenizing happening. We have one project in Mozambique, which is around tokenizing mortgages and affordable housing. And so we have starter homes that are going for about $10,000. These homes are cyclone resistant. So obviously in Mozambique, there's a lot of extreme weather events along the coast there. And so these houses and the mortgages underlying them, they are tokenized, and then they can become crowdfunded upon. And so then money flows in from international investors. The investors earn a coupon on top of the payment that's put in there. And this allows the tenants to get access to these homes in a lease-to-own model. And so then over time, as the tenants are making their rental payments, they're also contributing some to equity. And that allows them to build up their equity, build up their on-chain credit history. So that way, one day they might be able to go to a bank and get a real mortgage, or to avail another line of credit. The last area that I would touch on is just around cash transfers. I think with cash transfers, and this is touching on what Osama was talking about with the Vodafone mobile wallets, obviously a lot of money is flowing cross borders, about $600 billion across low-income countries. One use case that gets unlocked with smart contracts, AI, satellite imagery, weather data, is that you can actually do anticipatory cash transfers for climate emergencies. So if you say that based off of some climate modeling, that a cyclone or a drought or a flood is going to hit this specific part of the world, there's a lot of evidence that suggests that the earlier you send that money, if I send that money to you like 2 days before that disaster hits versus 2 days, or 2 days before versus 2 days after, you can invest in buying supplies, protecting your livestock, protecting your housing. There's a 6-to-1 ROI by doing it before versus after. And so leveraging all the different technology and different data points that we have at our disposal, using programmatic digital currencies, whether that's mobile money or something else, you're able to actually just set up an automated process where you feed in data to this model, you can see where it's going to happen, and then you can trigger immediate payments to people's mobile wallets, and therefore they become much more resilient to climate shocks and emergencies. So yeah, just a few different things that I'm seeing that can affect retail users.
Excellent. So we talked a lot about technology, about fintech, about green, about all sorts of things, but in the end, let's remind ourselves that this is all about the financial sector to start with. Banks are going to be critical in all this journey. And of course, it requires harmonious relationships and harmonious partnerships between banks and fintechs and technology providers. Do you have anything to share on that front? I know you've had some experience in how those partnerships could actually unfold and be driven. Can you spend less than a minute to share some of your experience with us?
Absolutely, because as a fintech, working with banks, it's kind of the great milestone to be able to scale and get access to a large number of consumers as well. But for banks, when you talk about technology providers like us, and we tell them about artificial intelligence, using data from satellite, or using blockchain, they can get a little bit scared. And when a bank, for them, the most important thing is to be able to be profitable. There's this issue of thinking, how am I benefiting and how are those technologies going to help me achieve my bottom line at the end of the day? So we had, and again, I'm going to mention Kenya, like great support from at the government level, like central bank level, but also with development financial institutions like the African Guarantee Fund and the African Development Bank to foster those collaborations. The central bank, I've already mentioned it, but it's important when you have institutions like what Racha mentioned with Sandbox, where the banks themselves can see that you have the backup from the regulator to be able to operate, because they can have those fears about how is the data collected, do we have the right to share it, is there a way to keep that data secure? So working in a sandbox as a fintech can really help the banks to feel more comfortable working with you. The second one is with financial institutions like the African Development Bank. They, with their technical assistance funds, can finance pilots, what we have with Absa Bank, for instance, to help implementing those technologies without affecting the bottom line of the bank. And then once the bank is convinced, they can take us up on a commercial basis. I believe that those collaborations can really help us to get from just a finance 2.0 approach, like profits and people, inclusivity, to like really the 3.0 financing that we need, where we take into account profits, people, and climate action. And I look forward to more collaboration.
Great. So it's time to close the panel. Rasha, as the host of the panel, representative of CBE, would you like to close us off with a few words of inspiration and wisdom, hopefully, on how do you see the whole financial sector shift towards greener and more sustainable finance through those collaborations between banks and fintechs?
Sure, and I think that we're going to hear the word green a lot. So it's green fintech, green banks, green central banking. So we're going to hear of it a lot. And this is why it needs like a collaborative effort. It's for the government and the regulators to come up with incentive schemes that come up to exposure to funding and initiatives. It's we can actually tie with the private sector where R&Ds and universities for us to have innovative green technologies in order to develop new solutions with the private sector, with the fintechs and everything. So it takes like a unified strategy when it comes to communication and public awareness and capacity building. So it's a whole like collaborative effort between all stakeholders involved in the ecosystem to make it happen. So hopefully we're going to do it for Egypt and Africa. And
thank you very much, Rasha. So with that, I think I miserably failed to save any time for Q&A with the audience, but I'm sure the panelists are going to be around. And as you can see, they have a lot of interesting experiences and stories to share. They will be around for questions. Please don't hesitate to approach them. And I would just like to close this with a big round of applause for all the panelists, please. Thank you very much. It was a great pleasure.
thank you. Yes, thank you for moderating.